You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, Quasar Markets Live, and good afternoon, Agnieszka. How are you doing today?
Very well. How are you, Howard? Interesting day today with a Fed announcement. So
yeah, Fed announcement. It's been a tweet analysis day. The president can't stay off of Twitter, or either can President Putin. It's been everybody today.
Right. Yeah, it's definitely testing all kinds of resilience and mindset skills of every single trader. And I can imagine that some traders are asking themselves the question, how can I stick to my plan in these conditions, right?
Yeah, without a doubt. What I wanted to talk with you about today is that I'm seeing some people that are getting really risky, and maybe we could talk the difference about taking quick profits versus quickly jumping into trades, and the different sort of psychology there between the two. And you brought up before we came on some things you've been seeing. So what are you seeing out there in the market?
Well, one thing is, when you have a plan and you are trading in the conditions that you were used to when the situation was a little bit more stable, I would say, or not so much Twitter driven, there was some kind of logic you could find, like, okay, if I have a strategy and I follow my plan, then I can count on a certain probabilities, right?
Right
now, there's a lot of fear that with every tweet, anything can happen. And even though this is always the case in the markets, anything can happen. I see that people are just much more, they're more scared. So they are taking the profits quicker, but also jumping into trades quicker. So this kind of thinking about, I just want a quick win quickly, so I want to get in and out from the market, that is making them throw away the whole strategy out the window.
Right. And that's exactly. They see a win, or they see a stock that they were watching yesterday that did the mean reversion bounce or the mean reversion retracement, and they say everything's going to do that.
You can always assume that, you never know for sure. So that is general.
And I think it's important between the two to sort of, to differentiate the two. Because like you said, this morning, I convinced Big Beat to get out of a Tesla trade, not all the way. He took 3/4 profit because it had shot up, but the president was tweeting left and right. All it takes is that not to get well received by the market, and it could have gone backwards. And I see now that it sort of is going backwards right now. So that I'm good with. Like, that part I love, locking in profits, making sure your trade is going to stay profitable. What I don't like is the second part, is that people, like you said, seem so anxious to get into a trade. It's, the FOMO seems to be too much for people right now.
Yeah, getting into a trade too quickly stimulates your impatience. That's, or the other way around. Your impatience and your urge to get profits stimulates you to quickly jump into a trade without thinking, is it even a setup? Your head is going to tell you, oh, everything is going up, so let me just get on this train and just get some of it, right? But one thing that is important to understand is that quick win does not mean quick trade.
Right. Absolutely.
The most important thing for a quick win is that you are getting into the right setup at the right time and that you manage it properly. So your biggest chance to have a quick win is when you actually wait patiently for the highest probability setup, because you might have noticed that when you are getting into a really good setup, then when it starts working, it works really fast. Usually when the setup hesitates, that is when things start to be shaky, because you're getting shaken and think, oh my God, is this going to work? Is it not going to work? And you might jump out of it. And when the trade doesn't work immediately, you start introducing, your emotions into it. But from the setup perspective, it's also beautiful to get that fantastic setup that you have been waiting for, right? Your A plus setup, and then see it working really quick. That is a quick win. Quick win doesn't mean quickly jumping into a trade.
And I put it on the screen. Quick wins don't come from quick entries. In other words, they come from well thought out trades that then give you a quick win and you get out of it quickly, not get into it quickly.
Right. Because when you have that A plus setup, usually it works immediately and it works fast. Of course, depending on your timeline and your strategy, but we are talking about day trading here, right? And most traders these days, they trade prop firm accounts. So they're anyway. Right.
Yeah, and because they don't think it's their money. It is their money. They got to look at it that way to be, sometimes, although I get it, because it's also why they're less fearful for entering trades too.
Maybe they are less fearful to enter a trade, but they are more fearful not to lose money or not to lose account, which usually doesn't happen because that's what you focus on.
Right.
I think regardless whether you're trading your own account or not, there is always a certain dosage of emotions that will always come into play, especially if you are not choosing setups that are within your strategy, and that when you are choosing the trades that are not within any type of setup.
Right.
And regardless of market conditions, whether there are tweets or not, if you have a setup that you are looking for, this is also making you more patient to actually be there and look whether the setup is presenting itself to you. I often hear traders saying, I'm sitting here waiting for my setup. When you are waiting for something, that is automatically making you impatient. Just like in life, if you're going to a meeting and you're first person there and now you're waiting, after 2 minutes, you might start getting impatient because you are in a waiting mode. Trading is not about waiting. Trading is about being there and being present to what is presenting itself to you. So when you are watching your charts, don't think you are waiting for your setup. Just be there because you are there to learn, you are there to watch the market, you are there to trade. But trading does not only mean pushing buttons and making quick transactions.
Yeah, without a doubt. That is the difference between the two is, but I'm seeing a lot of traders that are just, they're just got that buy the dip mentality right now. And it's definitely burning some people for sure.
Yeah. And, no matter what you do, if you don't trade with your plan, and I totally get it, at this point in time in the history and where we are with our politics and the world, it's not easy to understand why do you need a plan if everything is upside down.
Right.
But your plan is your only sort of a safety blanket, something to hold on to as if you are walking a slack line. Because every time there is a chance that you will fall because of some tweet, the price might start going in a different directions. And you have to know when is that point that you are cutting your risk. And if you don't know that before you get into the trade, then you are going to do all kinds of crazy stuff while you are in a position.
Yeah, no, that is exactly right. That is exactly what tends to happen because they don't have it set up. So they don't have everything set. So where should my stop loss been? Where should my take profit been? They just jump in and say that I'll sort of figure that out on the back end. And that goes against, as you know, all the things that we talk about on a regular basis, right?
Yeah. And, there are also, there's a lot of excuses you can think of. Oh, I don't have time. I'm taking trades too fast. I'm a scalper, so I don't have time to think of a plan. Well, these are all excuses because if you have no time to think what you are going to do, that means that you are doing it without thinking or without any
plan, without a true plan.
Yeah, and without any type of risk management, which is the most important thing in your trading. And that is causing a cascade of emotions that are coming into play. You bring it into your transaction because you don't have the plan, and you might think, yeah, I don't need the plan. I'm just there, and I'm just clicking the buttons. But well, if your results are great, fantastic, but I doubt that this is the case, because if you
Right.
don't have good risk management, without good risk management, most likely you are giving away all your profits.
Yeah, no, without a doubt, that's what you're doing. So, you definitely have to avoid that. Are you seeing more of your traders that are, well, you deal with a lot of scalpers as it is. Are you seeing some of your traders that maybe were more swing traders changing their techniques or their styles?
Not really. What is very common, because the scalping part belongs to, well, a lot of our traders that I work with, they are trading with prop firm. There
Right.
are many who have their own accounts as well, but the majority of traders these days are working with prop firms. So the rules that prop firms have kind of make them scalper, because
Right.
of the drawdown rule. When the price goes up, and some prop firms have the drawdown rule for a day, but some of them have drawdown for a trade.
Right.
So this urge to, or urge this need to take profit is much stronger than when you would be trading your own account and maybe be more patient with letting the price get to your target. What happens often is that you start using this as an excuse why you didn't let yourself get the profit that you have had in your plan, and later on you actually see that the price did go to your target. And that's when the frustration kicks in, and you think, oh my god, um, why didn't I stay in this trade? I could have had more money. So now I want this money that I haven't made, that I actually cut myself
Right.
short with. Now I want this back, right? Because it's my money. And then you start getting into a trade again just without really thinking, and lose more of your profits. So I don't see people getting off the train and saying, hey, I'm going to be more a swing trader. I think, in fact, in these conditions, probably day trading might be a little bit less frustrating, because if you see your swing trading account and you have positions, and I personally day trade and swing trade,
Right.
yeah, you got to have some resilience and really good tight plan, saying, okay, where am I gonna cut this? Because one day you might be in profit and you're like, okay, the chart looks great, and there's a lot of charts that look fantastic right now,
Absolutely.
but then the next day there is some kind of drama, and suddenly it's like, oh my
Yeah,
god,
the
what is.
best laid plans, like they say, of mice and men often go astray. And that, yeah, so that it is definitely different. Do you find that you need to, or you are talking to your traders about maybe approaching their days a little bit different to avoid being in a quick enter, and get involved in those quick entries too fast?
Having patience to wait for, or having patience to sit there and be present, to look for your setup, has has everything to do with your routine, and how do you prepare yourself to come to your trading desk and trade. So I always go back to, how did you prepare? What is your intention for today? What kind of techniques are you using to regulate your nervous system so that you are able to withstand the pressures that the market is throwing at you, whether the market is volatile or whether nothing happens in the market, because that can be equally frustrating and make
Right.
you do really crazy stuff.
Yeah. Oh, yeah. Absolutely. And, some people get way too impatient. And yeah,
Correct.
as I always tell my class, it's a marathon. This isn't a sprint. And, you got to make sure that things hit the right spots. Right now in crypto, we're just range trading. It's not moving one way or the other on most things, so, there really isn't, and it's not moving with enough distance that it's giving you even a good range right now. So you
Right.
got to be patient.
Another part of being patient and actually being able to trade your strategy is your personal alignment with it. So we always talk about mindset, but the other part is also the strategy that you are trading. Is it
Right.
actually something that suits you? Because if you are someone who is very impatient and haven't worked your way up to having more patience, then most likely when you are trading breakouts and you end up in a ranging market, you're gonna keep taking those trades and all those paper cuts before before you blow up your account, because every time that the price will go to the upper range, you will feel like it's a breakout, right? So
Right.
you got to know yourself and what kind of strategy are you trading, what is your risk tolerance, what is even your level of skills to handle your nervous system, for example, or what is your level of awareness where you are with your head when you are trading. Are you constantly beating yourself up? Are you talking yourself into trades you shouldn't be taking? Or you are maybe just simply following someone else's uh, suggestions, I would say, where to enter
Right.
and where to exit. And that could be also very frustrating, when you are taking the trades. Like, imagine you are in a chat room, and that happens a lot. I have been in many chat rooms years ago myself, and it always ended with a drama, because when you are following someone, and some, okay, this person is getting in at a certain point, right? Oh, now they're already in. Now you're trying to get in. Now you're
Right.
trying to, and then you are not the same level as the person who is leading the chat room,
Absolutely.
mentally, resilience wise, mentally. And you also probably have a very different risk tolerance, because your accounts are very different, right?
Absolutely.
So you might be dealing with $500 risk, or maybe $50 risk, which might be even for you at this point too much. But the other person deals with a completely different numbers, and they're okay risking more without getting shaken. Now you're trying to follow the trade with a totally different parameters, and at some point you might bail on a trade that
Right.
might work eventually. So I remember taking, a lot of different trades that were working for other people, and I was losing money because
Yeah.
I was simply in a very different place, mentally, resilience wise, and also on my financially in my account level.
Yeah, no, you definitely see that with those type of chat rooms and things. It makes it hard. You don't want to follow the masses. That's where Reddit gets you in trouble. Twitter can get you in trouble. Wall Street Bets can get you in trouble. I mean, they're still chasing GME and AMC, right? Um, that's
Some days it
that's
might work, some days it might work, but just look at all these people who have lost money on it, right?
Yeah, yeah, no, it absolutely is. It's so important to have your trading plan, your idea. Even, I tell my students, I give you the tools then to go out and fish on your own. What we're doing is teaching you, what are the setups we look for? What are the indicators we use? How do we research our stocks or our crypto or our Forex? Where do you get your insights? How do you manage, fundamental versus technical analysis and all that? But ultimately, as you just said, the person who pushes that trigger that hits buy has to take ownership of that trade. And too often people don't. It's not every trade is for every person.
Totally. And the taking ownership is such a key part in achieving success, whether it's in trading or anywhere else, because the moment you take ownership, you are taking control over the results that you are getting, which means that
Absolutely.
if you're not getting the results you want, that means that you need to change your actions. And if you have that ownership, it's all in your hands to change the actions.
Right. No, exactly. That's it is, I know people, in some of those complex trading rooms that have options and all those things, they don't even understand what they just traded. You'll see someone in one of those, they'll, on Twitter, Wall Street Bets, I just bought this, covered call, and someone else is like, well, how'd you enter that? If you don't know how to enter it, do not enter the trade. You don't know enough to even know how to put it in your system. then you really shouldn't be going after it, on those complex option moves that some of these things are doing. And again, or that they don't even understand what is the thing. I bought this trade someone had on Twitter, and I thought when the price went up, it was going to go up. The price went up, it went down, because maybe they don't understand how theta, influences a trade, and they bought a naked call or put, but they bought it too close to expiry. So, it's very tough. And it's something that we often tell people is get your basis first. This is a marathon, not a sprint. Get the learning base under you. And then when you feel comfortable, you start to join the trades.
Yeah. And I think the biggest part of that setting in your head when you're starting trading that it will be easy and it will be quick is how it's being advertised, and getting this truth into your mind and really embody it, that this is a career like any other career. This is not an overnight thing, and just accepting it that it will take time, but not just time of sitting there watching your charts. It takes time to learn it, and there are certain things you have to do, certain areas you have to learn about, certain handling, certain skills. All these things are important for you to master the skill.
Right.
When you master the skill, then you can talk about then you can start expecting some sort of results. But in trading, it's kind of upside down. You begin and then you expect results, and then you don't get the results and you wonder why. You get frustrated, so you're just kind of try to do more of it without actually learning the skill. And this is not to mock anyone or to laugh about you that you don't understand. This is to make you realize that there is a certain amount of work that needs to be done.
Absolutely. I look at it, in my students, I have people that are scared to ask what they think is a stupid question. And I'm always telling them it's not. And there's probably another 10 people in the room right now that have the same question that don't feel comfortable asking it. Again, the thirst of knowledge or the desire to learn is something that I'll ask you as another educator. That's the thing I love. When my students ask what might be the most basic question, it excites me because it means that they trust me enough to go backwards with them.
Absolutely. I personally learn every day. Every single day I learn about myself. I learn about trading, new things about the market. Market constantly changes. These conditions like we have right now, I have been trading for 15 years and I have not experienced that. So for me, it is also new, not just the conditions, but how do I react to it? How do I find myself in these conditions? How do I find myself in this new reality? Because my nervous system is not something that is automatic. Like, it is automatic, but it is also looking for new ways to handle it, right? I have built a certain resilience, but when there is new information coming in, my nervous system is also reworking it, right? And coming up with some ideas. So there is really no shame in not knowing. There is only shame in not learning. Because when you don't know something, when you don't know how to do it, you cannot just say, but I didn't know. It's not the case of I think we talked about it before. It's not a case of, oh yeah, I don't know how to do it because I missed that class at school. It's okay that you missed it, but now it is costing you money. So you might want to actually go back and learn about it, right?
Absolutely. Absolutely. Well, Agnieszka, I don't want to take up too much of your time. You are so gracious and giving it to us every week, a couple of times a week, and we appreciate it. Any final words for us as we head into the FOMC meeting today?
I would say, especially if you don't have too much experience, don't sit there thinking, oh my God, maybe there will be a big move one or the other way and I'm going to catch it. Because again, quick win, the expectation of quick win can mean a quick loss as well. So
Absolutely.
Be mindful about that. And you might just want to take a step back and first watch what the reaction is. And once the biggest thing is over, then you can
And I
Actually,
talk about that all the. I love that you brought that up because I'm going to end with that. Is we don't have to trade the edges. Just catching the body of a trade is usually more than enough to be profitable. And
absolutely.
as you know, one thing that is common thread among almost all of the educators that I talk to here at Quasar Markets is that everybody says that is that playing on the edges is where you fall off the cliff.
That's really well said. So thank you for that.
We're going to leave on that note. Quasar Markets, thank you so much for joining us, everybody. Agnieszka, thank you so much, like always, and we will see you next week. For those of you at Quasar Markets, we'll be back on Friday morning. We are off tomorrow for Juneteenth, so we will see you bright and early on Friday.
Enjoy, everyone.